Realty Income is currently trading at $52.47, and over the past year they are down by 10%, and over the past 5 years they are down by 30%, currently trading very near their 52-week low. So jumping straight to our stock valuation spreadsheets, let's value this dividend aristocrat. First of all, we can see their high dividend yield sitting at almost 6%, which is much higher than their historical average dividend yield. But we can also see their high trailing FFO payout ratio sitting at 77.40%, which I never really like, as it means that the company cannot direct most of their FFO into innovation, share buybacks, paying down debt, and increasing that dividend. So jumping straight to the 9-pillar analysis, let's first actually have a look at the debt of the company, which is something I'm slightly worried about. If we have a look, we can see that the long-term liabilities over the 5-year FFO negative dividends is currently sitting at 13.62, which means that Realty Income would take more than 50 years to pay off all their long-term liabilities with the FFO they currently generate and with the dividends they currently pay out. But as Realty Income is a REIT, most of these long-term liabilities are probably long-term mortgages, and as assets do rise in price, this high value doesn't bother me as much with Realty Income as it would with other companies. Now let's also have a look at the growth of the company. Their revenue has been growing at a very high rate of 28% yearly on average over the past 5 years. Their FFO has been increasing at a rate of 32%, and their net income has been increasing at a rate of 31%. So Realty Income has been performing some very nice growth. We can also see that their 5-year price to FFO is sitting at 17.16, and if we zoom in closer, we can see that currently it is sitting even lower at 13.45. So the company would be considered undervalued compared to their historical price to FFO. Now let's jump back to the 9 pillars and have a look at the company's decreasing shares outstanding. Realty Income has actually been increasing their shares outstanding at a very high rate of almost 22% yearly, and this isn't great as it dilutes the market and in the long term lowers the value of your shares. Now the good news is that their FFO has been rising at a higher rate than they have been selling out shares, and this means that they don't have to go into debt to pay out the extra dividends, and in the long run they will also have some extra FFO to push into innovation. Now let's also check out the company's consecutive dividend growth, which is sitting below average at 2.75%, but the company makes up for it with their high dividend yield of almost 6%. So now that we have covered the 9-pillar analysis, let's calculate the intrinsic value of Realty Income. So jumping to our historical price to FFO model, we will get an intrinsic value of $65.16. For the second valuation model, the discounted FFO model, we will plug in the funds from operations over the past 5 years and calculate a growth rate of 9.3% into the future and get an intrinsic value of $54.84. Now for the third valuation model, we will compare Realty Income to 3 of its competitors and get an intrinsic value of $61.39. And finally, looking at Realty Income's dividend growth, I will project a dividend growth of 2.67% into the future, and we will get an intrinsic value of $46.65. Now when we average out these 4 valuation models, we get an ultimate intrinsic value of $54.02, which is about 2% higher than the current trading price, and with a margin of safety of 15%, we would get an acceptable buy price at $45.92. Now, as I do want to be fully transparent, I currently do not own Realty Income in my portfolio, and if I was to buy it, I would buy it under our acceptable buy price of $45.90. And with that, if you did enjoy the video, make sure to let me know down in the comments if you are buying, selling, or holding Realty Income, and also make sure to leave a like and subscribe as it really helps me out.